Kenya Central Bank, as I said to you, has raised its benchmark central bank rate by 550 basis points to 16.5%. It's all in aid to fight inflation and exchange rate volatility in Kenya, which is East Africa's largest economy. Joining us now from Nairobi is Fred Mweni. You know him very well. He's the Group MD of Tsavo Securities and a fabulous expert to provide insight. So, Fred, always great to have you. So a very aggressive interest rate hike. It's on the back of another aggressive interest rate hike about a month ago. So we've seen now in total in 1 month, CBR coming up almost 950 basis points. Is it going to work?
Thank you very much. This is quite interesting, actually. I think this time around is going to work. We know when we increased by 400 basis points last month, there was a bit of stability only for a day or two. Then the market got back to normal, and you've seen clearly the inflation has even gotten worse. And if you look at the dollar, the shilling hadn't strengthened as much until today, between 98 to 100. So I think this was very necessary if the central bank is to really be seen as if it's really fighting inflation, and they really want to have some stable exchange rate.
Well, what we are going to see now is that the inflation figure is over 17%, and now the interest rates are at 16.5%, so almost parity. Is that going to strengthen the value, for instance, the yields on government treasuries, strengthen the currency on the other hand, tame inflation in the long term?
Not necessarily. Let's start with the inflation. I think that the inflation numbers are very cyclical, and obviously now we are over with October. We have gotten into November. There's been a bit of rainfall around here, so probably the food prices might stabilize, and the prices probably might not go as much as they've been going up in the last 3 months. So I think from that front, probably we may see the inflation numbers for this month, month on month, and probably going towards December, will be stable, and therefore maybe maintain at 17 or probably slightly strengthen and come slightly lower than 17. So I think on that front, probably we are at 50-50. On the side of the government treasury bonds, it's going to get worse. Today, for example, the overnight was doing between 21 and 22%. That's the interbank. And the CBR window, the central bank window, we were doing 23%. So clearly, if you look at those numbers, they are way ahead of the 91 days and the 364 and the 182 days. And therefore, the increase of the CBR to by 550 basis points only strengthens two things. One, liquidity is going to be a bit scarce, and therefore I'm expecting the overnight probably to jack up maybe to 25, 26, all the way to 27% in the next 1 week or so. But most importantly, they have touched on the CRR. Now, on the CRR, that's a very immediate impact. Yeah.
Before we go into the cash reserve position, the Kenyan shilling today trading in the region of 98 shillings 50 cents, so a lot better than that 107 shillings to the dollar we'd seen about 3 weeks ago. The rising or the raising of the interest rate, what impact is it going to have on the shilling? It's definitely had an immediate impact, but as you said, we've seen so much volatility that we can't really say that there's a correlation between the interest rate and the exchange rate. But will this kind of aggression in terms of hiking by 550 basis points stem the volatility we've seen on the exchange rate fund?
I think for the exchange rate, it's going to do some magic there. Remember that the banks right now are funding between 20, 21, 22%. So it really doesn't make a lot of sense to be funding at 23% and you're still holding your dollars there, which probably you got slightly below 100. So I'm expecting in the next 1 to 3 weeks, probably the shilling to strengthen a little bit until maybe we hit 95, 96, 95 there. Right. And then we can hit some some stability level. But also, most importantly, I've seen banks, for example, with these two things, the reduction of the exposure on the foreign currency from 20% to 10%, actually has a little bit helped And probably that's why we are seeing the shilling trading at about 98.
Right.
But with the coming of this, the CRR, I think we are likely to see it probably strengthen further to about 95.
Okay, so the cash reserve position coming up now, 50 basis points at 5.25%. What impact is that going to have on the banks? Because really they've suffered the most in terms of exposure to losses, if that's the right word, and rising yields and rates on the treasury bill side. They're the ones who are heavily exposed on the forex side.
I think, again, two things. One, I'm expecting between 55 to about 60 billion to be swiped away from the market as it goes to central bank because of that increase, knowing that we are about 1.4 trillion on the deposits in Kenya, so 5.5% of it. Now, but more importantly, I'm seeing a bit of a cycle here. The market has been tight for the last 2-3 weeks. Central bank has been mopping aggressively. In the last 2 weeks, they have mopped a couple of shillings in the market. So as we woke up today, the market was short of shillings, and hence people are funding at those kind of rates. And I think the touching of this, even the banks that are short today or that have been short in the last couple of days, who in fact have been accessing the central bank window, will be forced still to do the 50 basis points and therefore give the central bank that CRR. And therefore, from that end, I'm seeing a tighter market this week, next week, and the next 2-3 weeks.
Okay.
Those people cannot be able to sell those securities because obviously the market is higher. But I'm also seeing a serious under-subscription for this week's 364 days and the 291 days and 92 days. And therefore, the rates for the 91 days maybe from 15.3, we should be eyeing the figures of 18.75 to 20% in the next 3 weeks.
Okay.
Similarly, for the 364 days. So if you look at those two fronts, the market is going to get more tighter. They're going to get less subscription for the premier auction, and therefore the overnight is going to go higher.
All right, Fred Mweni, on that note, thanks so much for your time. He's Group Managing Director at Tsavo Securities, Kenya Central Bank, making a decision that was quite surprising for many pundits. The CBR, or the benchmark interest rate, coming up by 550 basis points at 16.5%.